So many channels on YouTube recently have been talking about iRobot stock and the seemingly incredible value that the stock currently provides. And of course, the biggest, most popular channel out there that's discussing this is Jeremy from the Financial Education channel, because he recently started buying into iRobot stock not too long ago. And while I agree with a lot of Jeremy's picks actually, and we see eye to eye on a lot of different stocks, there are some stocks occasionally that I absolutely disagree with him on, and iRobot is actually one of them. 3 months ago, I made a video about at-home stock, and I pretty much discussed his investment, and I picked it apart, explaining why I believed at-home stock was not a great company to hold. And shortly thereafter, Jeremy actually did sell out of his position in at-home stock. So did I have any influence on him making this decision? Who knows, but what I do know is that Jeremy is actually a very intelligent investor. He will adapt to situations fairly quickly when he sees something isn't going the way he wants it to. And he isn't afraid to cut losses and move on from potential losers. This, in my opinion, is what makes a great investor. Admitting when they're wrong, admitting when they've picked a company that, they thought would work out, but things just don't seem to be going the way that you want it to. And instead of bag holding it like GoPro, cut your losses early and move on. But now the real question is, guys, can we see the same thing happen here with iRobot stock? Well, what I want to do today in this video is actually present you reasons why I personally am not a believer here in iRobot stock, and why I don't believe that it's a buy, especially after doing a lot of research here on this company. Now guys, if you like this kind of videos where I look at other financial YouTubers, look at their investments and give my opinion on those investments, leave a comment down below, but also dropping a huge like, because we're trying to aim for 350 likes on this video. Also, don't forget to share this video with Jeremy. Let him know that this video exists so he watches this and hopefully create some sort of rebuttal to this video on why he disagrees with me and why he still believes that iRobot is an incredible stock to hold for the long term. Now, really in this video, I want to discuss three things around this stock. The first is the balance sheet of iRobot. The second is the tariff situation surrounding companies like iRobot. And the third is, of course, is iRobot really undervalued? So first, let's start off by looking at their balance sheet. Comparing 2018 to 2019 in the latest earnings report, we see a few things that isn't the healthiest signs when looking at a growth company. Revenue increased, so that's a good sign. However, the costs also increased, and by doing some simple math here, we can see that the increase in revenue is almost a one-to-one comparison to the increase in costs. So we can see that this revenue increase is a positive after looking at the numbers. Digging deeper, their operating expenses also increased across the board here, with a lot more focus on their marketing. Now this can be good in the end, but this signals that maybe they foresee their sales dropping. So they need to push more marketing to get the iRobot and Roomba brand out there. Next, I looked at their balance sheet, which gives us an idea of the financial health of the overall business. And here we want to see strong cash balances and investments. And ideally, we want to see this with minimal debt if possible. So first, we see the assets, and we see a few red flags that popped up here. Cash balance of the company dropped from 130 million to 70 million, which is a 46% drop, which cannot be overlooked in my opinion. The second red flag is that short-term investments also dropped from 31 million to 20 million, which is a 35% drop, again a significant reduction. And finally, the inventory increased nearly 50%, which some may see as a good thing because now iRobot has more products to sell. But I see this as a negative because a buildup of inventory signifies to me that people are not buying the product as much as the company estimated. And this is also shown by their days in inventory log, which states that products are sitting in the inventory much longer now, from 113 days to 149 days on average. So the question, of course, is what use does it have a $250 million worth of inventory if you can't sell that inventory? A lot of people see inventory as a positive for a company, and in some cases it does make sense, but in this case I actually see this as a liability for the company. Now, speaking of liabilities from their balance sheet here, it wasn't too bad, except what I did notice was that long-term liabilities increased from 17 million to 66 million. Combine this with the decrease in cash and short-term investments, and we have another red flag here that we need to keep a close eye on. The positive, however, is that they do have enough cash to cover this. However, if this trend continues in 2020, their long-term liabilities will supersede their cash position. This is never a good thing for any business, let alone a growing business that needs to keep cash on hand to keep reinvesting and growing the company. And now when it comes to free cash flow, we can see that in recent quarters, they've actually been losing money with their current 2019 free cash flow sitting at negative 58.66 million. They have currently been losing money with their current 2019 free cash flow sitting at negative 58.66 million, whereas in previous years, they have been able to pull in a positive around $50 million in free cash flow. So this is another negative sign here, another red flag, as free cash flow 2019 looks to close out at a negative value. However, we still have Q4 to be reported, and we'll have to wait and see how that does before making a final statement on this. So after looking at the balance sheet, I do see quite a few issues here with iRobot on a fundamental level. Cash balance is dropping, inventory levels are rising, and profits are suffering. This is not a good combination for any company. Okay, so next thing I want to discuss really is the whole tariff situation here in regards to iRobot specifically, because a lot of investors are seeing this as kind of a saving grace for this company and many other companies if a trade deal is reached. So currently, if you're not aware, with the US and China trade tensions, there was a tariff of 25% applied to a lot of products, and iRobot unfortunately fell in that category, and as a result, essentially, their earnings took a 25% hit. And what the company has done for the most part, instead of passing this on to consumers, is that they've actually eaten up the cost themselves, which of course affects their balance sheet, their cash position, their profits, and pretty much every metric that investors look at when looking at a possible investment. But now many investors were actually hopeful that once a trade deal is reached, whenever that is, that this 25% tariff would most likely be reduced, and if that's the case, that would instantly help iRobot pretty much overnight increase their profits because they'd be paying potentially less in tariffs. Even a reduction of 15% would help the company significantly, but ideally the best case scenario would be that iRobot is exempt from these tariffs and they don't have to pay any sort of tax here, and they can just go to how they were a couple of years ago with all of that money going straight to their balance sheet. But unfortunately, it doesn't seem like things are working out as planned, because we recently see reports here that a trade deal is reached, and the 25% tariffs that were imposed will most likely remain imposed as well. And this means that iRobot will have to deal with this permanently and have to figure out other ways to increase their profits. And this is how investors reacted to the news with iRobot in regards to the stock. Clearly not a positive sign, and it actually took the stock down around 5% on the day. Now, logically, you may be thinking, you may be sitting there saying, so if iRobot has to pay a 25% premium now on anything that they produce, why not just charge the consumers more so that they can still increase their profits? Well, iRobot actually raised prices in July, but their competitors did not. So what happened here was that iRobot was now at a disadvantage in the marketplace. So what did iRobot do? They reversed their decision in October, and while this may help sales, this will continue hurting their profits as it's not a solution to their problem for the long term. The other thing this company can do is move manufacturing outside China, and they do see this as a potential solution. And in 2020, they will start with one entry-level product being produced outside of China, and they'll see how this goes. And then depending on that, they will accordingly adjust the rest of the products to be produced outside China. Now, in my opinion, this is the right move for them. However, I think they're moving a bit too slowly here, and this will allow the competition to not only offer similar products with similar features, even if they don't have the features right now. I think in the next year or so, they'll probably catch up to those features, but offer these things at a much lower price point as opposed to iRobot. This, of course, will hurt the company in terms of competition. This will hurt the company in terms of profits. This will not be a good situation, in my opinion, for this company. So yes, it is good that they're looking to move outside China. However, if they don't move fast enough, they may still be in trouble here. So while tariffs do hurt the business, and it's pretty obvious that this company is impacted by tariffs, what I see is them just saying, you know what, this is how it is. We're just going to have to pay it. We'll try to figure something out later on. And they're not moving fast enough. And as an investor or a potential investor looking at iRobot, that does not excite me. Now, moving on, the third thing I hear about iRobot a lot is in terms of their valuation. Is iRobot stock undervalued? That's the question I get asked a lot on the channel. So iRobot currently sits at a PE of around 14. And over the last 8 years, they seem to maintain an average PE of around 28. And using analyst estimates of 1-year EPS of $1.83, it gives us a forward PE of around 24, which is a bit lower than the average of 28. Now, 28 may seem high, but this is considered a high growth company, so investors are forgiving of a higher premium here. However, when you look at the next 3 quarters for iRobot, analysts are expecting negative growth for the company, with Q1 expected to have a 51% decline year over year. So naturally, when seeing this, you would expect the stock to be punished, and that's exactly what we see here, with iRobot down nearly 70% from its highs. And the crazy part is that this all happened in just the last 8 months. Now, this is all because of the tariffs, with quarter after quarter of them posting weaker numbers than expected. And just this combination alone has investors sour about the stock, and as a result, it got punished. So like I said, the current PE of iRobot is a 14, so at first glance, you may think this is a huge bargain. But when we look at a 4P and we're expecting it to pretty much go up close to double, it doesn't seem like as great of a bargain anymore, even if it does fall slightly below their average 28 PE. A 4P of 24 is still above the market average, and the market is still expecting it at that point to grow rapidly. But as we're seeing from the numbers here, we may not be growing as fast as expected. So is iRobot undervalued? I guess when looking at it on a forward basis here, yes, it is slightly undervalued. However, in my opinion, with the amount of risk that this company currently holds, with all the macroeconomic things going around it that affect it directly, it does not seem like a good investment for me. I don't like to invest in companies that are slightly undervalued when the risk reward is way too high, when there are so many companies out there that offer much better value with much lower risk. But guys, now all of this being said, that doesn't mean that the stock can't go up, say, another 50% in the next year or so if things start turning around for the business, sales are stronger than expected, and they actually move the manufacturing outside of China quicker than expected. But in my opinion, if you had to ask me what I think is going to happen in the next year or so with this company, I think they're not going to move fast enough. I think their sales numbers are going to continue to suffer, and their profits are going to continue to suffer. And as a result, I think that the stock actually carries way too much risk for what it's worth right now. Also, don't forget, if you just go on Amazon and search for like robotic vacuum cleaner or something, competition there is crazy. There's so many different options to pick from. So if iRobot doesn't compete on a competitive price point, consumers are going to pick these cheaper options and just go with those, because if they can save, say, half the amount with a product that works even 80% as good, they're most likely going to stick with that product. Now, this part is anecdotal, so I just kind of throw it in here at the end of the video for those of you that are still watching. But the last few times I've been to Costco to return an item in the last few months, I have noticed that every single time there has been at least one person that has been returning an iRobot to Costco. Now, I also had some friends that owned iRobots previously, but they have also ended up returning it because they didn't feel that it worked the way they wanted to. They weren't really happy with the product. And essentially what I want to get across here is that just because you go into a store and see iRobot plastered on the shelves and you're like, wow, this thing's probably selling really well because it's being advertised so heavily, it does not mean that consumers are happy with it, and does not mean that consumers are actually keeping the product after they buy it. So just keep that in mind, just a different perspective, but this is completely anecdotal. This should not influence your investment directly. But anyways, guys, don't forget to share this with Jeremy. I would love to hear his thoughts or rebuttal here on these points that I brought up. I know he's bullish on iRobot, and I know a lot of you as a result are bullish on iRobot, but I just want to help you see the other side of the coin here, because I don't think that the risk involved with this company has been discussed in detail here on YouTube. Guys, if you enjoyed this, drop your like down below, but either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.